A lot of volunteer boards would be in a situation, you're losing money, it's like, God, this is bad, we're not sure where this ends, and said, I don't need this anymore. Our board didn't do that, not a single one. They said, what do you need from us to go tackle the situation?
Hello and welcome to The Drive, the show where we join Chuck in conversations about moving forward. And today, we're going to talk about the 2008 financial crisis. So, Chuck, thanks for being with me.
Yeah, thanks, Alan. Looking forward to it.
Well, I'll tell you what, here we are in beautiful downtown Raleigh.
My, how it's changed.
My, how it has changed since 2008. But there was a lot of businesses and a lot of people impacted by that crisis. Take us back there and just give us a refresher on what happened.
Yeah, so if you go back to the early 2000s, there was a good time for this country. Economy was pretty good, home prices were going up, and what most people don't know, there are two economies. There's the physical, there's the goods and services economy, and there's a financial economy. Mm-hmm. And during the 2000s, the financial economy, Wall Street, financial institutions, began innovating with things like mortgages, where you get a 1% rate for 3 years and then it adjusts to whatever the current market rates are, as a way of helping people get home ownership. And so the real economy was doing pretty well, but there was a lot of things going on in the financial economy that created a bubble, and largely a housing bubble. And so housing prices were going up, and up. If you owned a house in the first from 2000 to 2008, 2009, price just went up, and up.
Yeah.
And as a lot of those loans, suddenly I got to pay the full mortgage rate, I can't afford it. What started as a housing bust, if you will, falling prices, really bled over into the real economy. Companies started laying off thousands of employees, and unemployment went to double digits. And what started as a housing bubble became the worst recession since the Great Depression back in the 20s. In early 2008, I don't know that many people saw it coming.
Well, it is certainly something that many will never forget.
Yeah.
And you served in many different roles and worn many different hats in your financial career. What hat were you wearing then, and what was it like?
I was, had been part of the Coastal leadership team since 2001. I was the tech guy. I was CIO, also had a wealth management business and some other things, but part of a leadership team that was, leading a growing, thriving organization. We opened 13 new branches during that period prior to 2008. Things were good, and we were doing a lot on the technology front. And so many of our members lost their jobs. Members who lose two things happen. Number one, if you're worried about job security, you don't borrow money. Yep. And if you lost your job, now you have to choose which loans you're gonna make payments on and which ones you're not. And so what initially started as loan charge-offs on credit cards rolled into automobiles. And so we started taking some pretty heavy loan losses, as pretty much every institution in the country did. And it was a difficult time for nearly every financial institution in the country, because it was the financial economy that was really breaking down. And that's the economy we operate in. And so suddenly we're having to confront a very difficult environment.
What were you accountable for at that point as the crisis was blooming, 2008, 2009? What were the things that you were most aware that you could influence in terms of how Coastal was run? And then you also got to tell me, what were the dangers you were most worried about too?
It was the fourth recession in my career at the time, certainly the worst by far, and they're all different. And so it was really the first time that at the leadership level of an institution that I was at the table trying to help figure out, what are we going to do? And it was twofold. How are we going to stem the losses we're incurring, but more importantly, what are we going to do to help members? And so one of the things we did pretty early on is we set up a member assistance program. We took a team of people and said, your job is to work with members, our members who have loans with us that are having difficulty making loan payments. And we introduced a series of loan modification programs to help members get through this difficult period of job loss, keep the home, keep the car, and that's what credit unions do. We don't like to have charge-offs. We don't like to take cars or houses back. And so that really began a new effort by us to figure out how do we help members get through this.
How did Coastal survive when so many of the other big institutions, I mean Citi, Wachovia, there was lots of them that were all not able to survive. How did Coastal survive, Chuck?
You know, I think the key part was, we have a volunteer board. And, one of the things that amazed me, a lot of volunteer boards would be in a situation, you're losing money, it's like, God, this is bad, we're not sure where this ends, and said, I don't need this anymore. Our board didn't do that, not a single one. They said, what do you need from us to go tackle the situation? After that, gave us full support, full resources. We had to make, they supported us in very tough decisions that we had to make, including layoffs, which I hope to never have to do again. The other key thing was we had to acknowledge we had a problem. And then having a team that came together and rolled up our sleeves and set about doing the right thing for members and turning the organization around for the future.
Well, once you decided that you were going to soften the blow to members and you decided that you were going to focus on the problem, what was the hardest thing to execute as an organization?
We had to step up the policy and procedure framework, if you will. And I know that sounds a bit arcane, but when your history is serving well-paid IBMers, and you find yourselves by 2008 serving people from all walks of life, your approach to that has to change. And we hadn't moved quick enough to really change our approach to lending, our approach to understanding the risk in lending. So it was about putting systems and processes into place that we hadn't needed before. It was about learning from things we should have done differently. I would say one of the toughest things I had in trying to lead much of the organization through that was, we're not going to point fingers. Wachovia, one of the best regarded banks in the country, didn't make it. We're going to make it. And so once you get past I want to blame somebody, and get to, let's get about doing the work to strengthen and improve this organization, things get a lot smoother. And I think it was turning that corner with a team of people that we knew what the challenge was, we knew what the work was, and you roll up your sleeves, and for the better part of a couple of years, we worked that agenda.
Well, I want to ask you a personal question. What was the moment where you realized you had enough influence in all the decisions that were being made that there was also major consequences to the decisions that you were making?
We knew going into this, we had grown branches too fast. So we had added a lot of employees, so our cost structure had ballooned. And it became apparent we couldn't afford the cost structure. I remember a meeting where one of our executives, who was part of this team, put a proposal on the table that said, we're really not growing in Charlotte, let's exit the Charlotte market. Let's close those branches. We ended up closing, I think it was 7 or 8 branches as we got to 2009, 2010. And that was tough. At the end of the day, I had to say yes or no. And ultimately the board had to say yes or no as well. I laid off 65 employees. And just having to grapple with those consequences. We did a lot to help them find jobs with other credit unions and so forth, but that really imprinted on me that there are consequences for every decision we make that aren't always apparent when you make a decision. And that's why I spend so much time thinking about tomorrow and the next day. And the next day, not so much today, is every decision I make today may seem easy and straightforward, but what are the consequences a week from now, a month from now, a year from now?
What would you say were the great distractions? What were the things that could have routed you off target, off of true north if you had let it happen?
People who wanted to defend the old way we did things. In times of crisis, there are always the deniers who don't want to accept that maybe there was a better way, maybe there was a different way. If we just keep doing it the way we've been doing it, we'll get through this. And I think history showed then that that's not the case. And so it took some time for the whole organization, I think, to come to grips with the kind of changes that we had to make to thrive again. And once we got the whole of the organization behind it, by I think 2011, 2012, we had the best year we ever had. Don't assume that the good times are going to last forever. You know, we exist within a U.S. economy. You know, the world's gotten very small, a world economy. They can change like that due to things you have no control over and can't see coming. And so there's always this tension between we want to grow, we want to strive, we want to take risks, and what might happen. What are the downside risks? And so, you know, leaders got to figure out that balance for an organization.
So Chuck, as an outsider, looking in on your career, in 2008, a lot of dynamics were going on. Seems like you did pretty well from a promotional scale and the way you moved through the system. How did that happen?
I don't have a magic formula. What I have learned and really learned through the financial crisis, it's about people. Good leaders listen, and they attract people to a vision, to a way of thinking, to a culture, whatever. And you got to assemble a group that are like-minded, and in the financial crisis, all see the problems as it is and are committed to moving forward and acting. Once you have that, you can move mountains. But I was fortunate to have a group of people inside of Coastal and a board that says, we're going to do what it takes to move this credit union past this crisis to a much stronger position. And you get enough people moving in the right direction, you can move heaven and earth, you can do anything.
In 2012, you became CEO of Coastal. What were the major priorities that you were focused on then?
We were continuing to recover. You know, Coastal's fortunate to have employees that come and stay for 30 and 40 years. So as we went into the period after the financial crisis, we started having a lot of retirements. And so the first few years were really about building a new team of leadership at various levels in the organization to take the organization through the next 10, 20 years. As things got back to what I'll call normal, business is good, the economy is good, we're healthy, then it's about building this team for the long-term direction of the organization. You know, and for much of the period since I became CEO has really been the focal point. Our members need us long-term. And we got to build an organization of people that are passionate about serving members, that are committed to being there over the long term. And so that's really been the focal point since then.
Well, Chuck, spoiler alert, we're going to do a show on just COVID and the pandemic and what that was like. Is there anything you reach back to the '08 crisis that you see that you really pulled out during that time?
It comes back to getting the right team at the table. None of us had any experience with what became COVID, a worldwide pandemic, nationwide pandemic. I'm not CEO because I'm the smartest person. I think I'm CEO because I know how to listen to people that are smarter than I and incorporate their thinking into better actions for the organization. And I think that's the big lesson from the financial crisis. Value others' opinions, listen to them, coalesce the best thinking into a path forward. And that's really how we tackled the pandemic.
Well, we've talked about Coastal's people, Coastal's employees, Coastal's members, and we haven't talked yet just about the economy of the Triangle, where you're just centralized.
Yeah.
How did this economy hold things up during the crisis? And as you look forward, what do you think?
Yeah, so I'll go back a little bit. Coastal grew up with the Research Triangle Park. IBM was one of the first companies to commit to that idea, to build facilities and bring a lot of people in. And so Coastal's grown up with what RTP and the Triangle have become since then. I used to ride through here in my former life back in the 80s, working with credit unions all over the state, drive through Raleigh, and it's like, there's nothing spectacular about this place. This is a dynamic place today. It is amazing to have seen the transformation of the Raleigh skyline, what's happening at RTP and around the entirety of the Triangle. And so Coastal grew up with that. And during the financial crisis, we didn't have the problems with real estate, residential houses going in foreclosure and so forth. This market held up pretty well during the financial crisis, much more so than Florida and California and various states around the country. And I think it's because the dynamism of the Triangle. Young people want to be here. It's one of the top growing cities in the country today. This market will do well. That's not to say we're not going to have job losses and some of the things that go with a recession, but I think we're in a great place to live, great place for Coastal to be a part of, and we're connected to the community. And so as the Triangle goes, Coastal goes.
Chuck, thanks for everything that you shared today. I know I'm walking away with a lot of insight that I would have never had if you hadn't driven down to spend time with us.
It's been fun.
I appreciate you being here. Well, thanks everyone for joining us. We'll see you at the next episode.